Everybody, welcome to the show. Channel member Rob, channel member X, channel member Ed, channel member Amy, channel member Gayton, channel member Darren, Clint, channel member Cliff, channel member Arturo, channel member Don. Welcome everybody to the show. And we have the FOMC minutes coming out at 2 p.m. That is not a rate change announcement. Every time this happens, every time the minutes come out, somebody's like, oh, it's FOMC day. It is not FOMC day. It is the minutes from the last FOMC day coming out. We will gain clarity on why they did a half point cut, right? Why did they say they were going to do like a quarter point and then jump up to a half point? We'll gain some clarity on that. Maybe. And the market will be looking for clarity on what's coming up after the election. Also, by digging into that report, the algos will likely fire off immediately when that report hits at 2 p.m. That's one of those things you got to be cognizant and aware of, that there will be volatility happen at 2 p.m. All right, it will happen. Like, it's not like maybe it's going to happen. There will be volatility that happens at 2 p.m. All right, so be aware, be cautious. It may be small volatility, it may be big volatility. There will be volatility at 2 p.m. All right, everybody clear? Everybody good? Everybody understand what we got going on? And all trading involves substantial risk of loss, past performance, not necessarily indicative of future results. That means I predict stuff. I use systems to predict stuff, high probability setups, but those may never work again. All right, that's kind of the nature of the beast. Like, past performance doesn't necessarily indicate that anything's going to keep working. Like, the market goes through cycles. Once you learn what cycle we're in, it seems like it changes. I mean, it's the hardest game in the world. All right, this presentation intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument, because there's a significant risk of loss in trading stocks, options, bonds, forex, futures, cryptos, treasuries. Don't long them, don't short them, don't trade them. If you desire somebody to tell you what to do, you need to hire and consult a financial advisor. That is somebody that could tell you what to do with your own money. But let's be honest. Nobody out there, doesn't matter how much you pay them, is going to be looking out for your money more than you. All right? You need to take a vested interest in learning some of this stuff and getting ahead. Make a little effort, and you can do it. You too can outperform the market if you try. All right. Coming up this week, calendar. That's the button I need. This week, here we are. We're already down to Wednesday. Whew. See, there's 2 p.m. right there. That's the FOMC meeting minutes. It is not a meeting rate change Jerome Powell speaking event, but we do have tons of Fed members speaking today. Already out there this morning, causing a little volatility in the pre-market. Right, and not that one. Tomorrow, the big show, CPI. This is the last CPI we get before we come into the election. Right there. We also have Fed members speaking. Right there. So we've got lots of stuff happening tomorrow that potentially can move the market. This will happen before the market opens tomorrow, like this CPI. These CPI numbers, we'll talk about them tomorrow morning. Today, well, I mean, we've been on a downtrend. They're declaring CPI beat. I've kind of been talking about this a little bit. They're declaring inflation beat for this cycle. I'm not so sure. All right. I think we can come ripping back, slamming in their face. If you do the CPI calculations the way we used to do them, like in the 80s, we're still hovering at like 9-10%. We're not at 2-3%. All right. They're thinking with the way they do it, 2.3 is the estimate, the forecast. If we get anything above 2.5, It's probably going to be a little bit of a knee-jerk reaction in the market. I suspect it might come ripping back, but we could get 2.5 pretty easily. But I don't know. It's kind of I think the algorithms will react to these numbers, but it doesn't make the market move any particular direction. All right. The algorithms will react. It's just, that's why do I highlight these events? Because the algorithms start reacting and we get some volatility in the market. The market moves faster and bigger than it typically would. Friday, we get unemployment change. I mean, that's Canada. I don't know. Not those. We get the core PPI, the PPI. I wish we get the year over year reported on Forex Factory, but we don't. So this comes out Friday in the pre-market right there. And then we get these almost every week, these consumer sentiment and inflation expectations. These might move the market more than the PPI right here. So these two hitting at 10 o'clock, that may cause a little 10 o'clock volatility. We also have tons more Fed members out there speaking, jawboning things around, trying to put band-aids on everything. So, yeah. I agree, Ray. Lies. All the numbers are probably, it's, if you've ever seen the show, Whose Line Is It Anyway? All the numbers are made up. The points don't matter. It's kind of the way the stock market all works. So, all right, that's kind of the rest of the week. Next week, we've got bank earnings jumping up, but we do have, this is interesting. Look, right here. Monday, bank holiday for the U.S. Interesting, right? Then we rolled into Tuesday, nothing. Wednesday, nothing. Thursday, nothing. Oh, we get a little retail sales action coming in on Thursday. Right there. And then Friday, nothing. So we get a little retail sales action next week. Otherwise, pretty benign on the financial news front. But we do have earnings coming up. Like starting Friday, we're going to have banks reporting some earnings coming up Friday. So be careful about that. Yesterday. Just more chop in the S&P. More chop. I know. The name of the game here. Chop. Have not been able to break through this resistance right here. Have not been able to break through it. That was our target. It was our target for a while. We got there. Stopped dead. I mean, look, we came up shy of it. Then we have 1 day, 2 day, 3 day, 4 day, 5 days, 6 days, 7 day, 8 day, 9 days, 9 trading days, almost 2 full weeks here. We've just been grinding on that target. Just grinding on it. Is this indicating we're going to pop? I mean, typically when we hit it, like we did right over here, we see a retrace back to the 100, the breakout level. We kind of did that. We came down to the vicinity, those candles right there. Come back up, and then we go on the extension. That would be the classic pattern. All right, the classic pattern. We come up, we bounce off, we retrace, and then we get the extension. We've not done the extension yet. There's the highs we got to beat to get the extension. Now, this one, NASDAQ. We did not hit the target yet. This is the high probability pattern. Are we going to finish this baby up? That would be the expectation. Now, how long could it take? Could take us right out into the election. Could take us right over here. Which way are we going? Not sure. Now, we could carry this party on past the election. We could blow off top this baby. We could go ripping on higher. This was a nice correction. Double bounce here. We've got a measured bounce cooking right there. It's got double bounce off the roadmap line. And we could shoot it all the way up to these higher targets here. That's all possible. Potential. All right. Kind of been warning about potential situations coming up after the election. Been talking about that Monday, talking about Tuesday, talking about Tuesday morning, talking about Tuesday during 30 Minutes of Awesome. You probably should catch up on where we're heading. I don't want to rehash it all right here. Now, interesting, S5TW back down in the 50s. We have recharged this baby. I keep talking about how these are giant oscillators. We're back down in the range where we can go at the top again. All right. We may, it possibly needs a little further dip. We could get that. But then we'll rally back up to the top again. All right. This is a giant market oscillator. It rallies up to the top, rallies down to the bottom. This is S&P 500 stocks above their 20-day moving average. We've just been grinding at the top, up at the highs, and this led to about 50% of the S&P 500 stocks being below their 20-day moving average. Healthy for going higher again. The S5FI was banging here above 80, and we've retraced back down almost to the trend line. We've been kind of holding this trend line since back here in April. May find support there again and go higher. This is S&P 500 stocks above their 50-day. It's a slower moving average. It takes more days to be above or below 50-day moving average. More days in the average, more energy, more effort, right? We have a higher number of S&P 500 stocks still above their 50-day. We go look over here. This one still doesn't feel like it's topped out. It did pull back off of the 80 level that we saw just a couple weeks ago when we hit that initial high right there on September 27th. That was that initial high right here. Right there. Peaked it out. I guess we topped out on the 26th and ground it on the 27th. S5TH topped out right there on the 27th. And we've pulled back. Now, the roadmap line doesn't really mean much on this chart. Take it with a grain of salt. This chart, it oscillates between about 20% and 80%. And sometimes we get some outsized moves up and outsized moves down. Not very common. When you look at the long history of this baby, go up to the weekly chart so we can zoom out, or 3-day chart anyway. See, we don't spend a lot of time at the extremes. Most of the chart is in between the 20 and the 80. So here we are at the top end of the range. Eventually, we're going to revisit the bottom end of the range. Probably not today. Probably not tomorrow. I do kind of suspect that we may see a higher move before we finish this current rally up. So if the market can recharge enough to push it higher, it's all in the small time frames, right? We may get a little further dip and then rally back up to the top. So that's what these can tell you. You may be like, how do you trade these? You don't trade them. They're just indexes. They just keep track of the percentage of S&P 500 stocks above their 50-day, their 20-day, their 200-day. And you may be like, do these exist for NASDAQ? Yes. Do they exist for Russell? Yes. They exist for other indexes also. So diving down into the ES, the futures, look at what's been happening overnight. We are showing some strength. Look at this. I just want to, look at what I drew yesterday morning. I wasn't perfectly on the money, but look. See that pullback right there? That's that pullback right there. See that rally right there? Let me just clear it. See this rally right there? That's that move right there. See that high right there? That's that right there. See this pullback right here? This pullback right here, that's that pullback right there. This move right here, guess what? this current move right here, probably this right up here, we are set to break out. We did exactly what I said we might do yesterday. I mean, that to me is a little shocking. Little shocking, but there you go. This is not magic. It's not rocket science. It's just a little bit of math. I pretty much, like, as I said yesterday, I'm not sure on the timeline, but it kind of fit almost. I mean, look, that happened a little faster. This one happened a little slower. Same vicinity. I mean, that's pretty dang close right there. Close enough for government work, right? I don't know. Hey, where are we going next? Probably going to break out, make some new highs that we've had for a few, for the last week or so. Well, if we can get through this stuff up here, we're probably going right up here next. Probably going right up there. All right. There we go. The path from here. So this is where it gets a little difficult because we don't have enough price action to really project it. But just clearing some stuff off of here. I mean, I just kind of shock myself sometimes when I get it that dang close. That was pretty dang sweet right there. All right, let's clear off a few things. See what we got. So yeah, there, move down, move that, move. Yep. All right, that low, that high, that low. Yep, right there. That's the next target right there. Probably find some resistance right there, 58.60. It should pop up here. Probably have some dips and hops along the way. That's the place I expect us to go next. Could go a little extra to the top. There you go. There you go. I mean, we could get as high as 59, but I think we're going to stop right here, 58.60 on the futures on the next expansion. NASDAQ, still working on getting up there. That next level, 2,500. Maybe able to extend up to 2,600. We'll see. We'll see. Russell, still showing weakness, not being strong like NASDAQ or S&P. Not clear. This is looking corrective, and I'm not sure what the next twist and turn is going to be on that one. Sometimes the charts aren't clear. Jumping back up to the daily chart on CL. So I laid it out, and we have pushed it to the extreme here. We've got, if we're going to maintain bullishness, we've got to stay above that high right there, that high right there. Said that yesterday. We came down right dang to it yesterday, rallied back up, and we're right down at it again this morning. If we start pushing through, odds are we're going lower than this low right over here. And if we end up down here into the election, the incumbent may win. GC, that has pushed down out of the box. We're likely to come retest this box right there. Bitcoin. So we've done a move up and a retrace. Well, move up and a retrace, move up and a retrace. Held above the roadmap line. This move up stalled out. So jumping down time frames. Got the low, we've got the high. We're at a measured bounce. If we don't hold the 4-hour roadmap line here, fact, I'm going to set an alert here, set an alert here. So here's the range. We've got to, if we break down, probably going to retest this low, if not make a new low at 59. If we can bounce up, break above this high, we're going to go retest the downtrend of highs and potentially try to break it out. So there's the upside potential. Here's the downside potential in the near term. And we're closer to testing support than we are to testing resistance. There's those levels. All right, that's the ones I'm watching. That high. Let's make it real clear. That high. And getting below the roadmap line. And more than just a little dip indicates we're probably going down here. Yeah, it's 618 and then that 786 right there. That's the support level for Bitcoin right now. Get below it, probably coming down here. At the minimum. Could go deeper. Ethereum, this is filling this baby out. Look. Break the neckline. We're filling that head and shoulders out. There's the shoulder, there's the head, there's the shoulder. We may flush it down. Dollar. Jump back up to the dollar pushing on through. I've said for a few days we probably will retest that roadmap line. Still looks likely. May do that and then retrace. Right like that. All right. Next up, Japanese stock market has not been able to break out. Look at that. Tried here, tried here, tried there. Trying. If we can get through those highs, this is likely to go shooting up here. New highs, 44,000. If we break down, here's the first layer of support. Here's the next layer of support. We get through those without holding. Probably takes us on down. New lows lower than this low back here on August 5th when the whole market was burning down in the US. This may cause another market meltdown in the US. If we do this. Right now, I'm giving odds to this. But we haven't broken out. All right. If you want to make requests, that show was yesterday at 5 p.m. Sorry you missed it. That's the one day of the week I do request shows. The morning show is just trying to look for moving opportunities for the day. I go pull, here's the general stuff I review every week or every day. Then I go pull everything moving $2 or more up or down in the stock market, in the pre-market, in the pre-market, put it on a list and then review those for opportunities. So coming up first, we have Helen of Troy and there's the gap down resistance. We're at the roadmap line, highly likely to bounce down and go lower. Caution is advised. We do have resistance up to the gap fill. Right there. ALB, not enough candles to do anything. Oh, look at that. CL pushing the extreme already. I'm going to set another alert at the top. Let's see. If we don't just reverse this now, not looking good. We've already overlapped. Not looking good. That run on oil may be done. ALAB, like I said, not enough candles to do anything with. Incredibly difficult to make any kind of prediction for the looking forward. Now, that said, we made a move up. We did this little retrace, and we're at resistance. So we may, in fact, here's Amazon firing off a 1 minute chart. We may, in fact, do a retrace off of one of these extensions and come right back here in this vicinity before we can build the bigger move up. Home Depot rallying on, oh, look at that, right to the target. Right to the target. Beautiful. Beautiful. Right in the target. All right. Stuff like Home Depot, Generac, Lowe's, all those, they rally very nicely into the hurricanes. once the hurricanes hit, watch out for the rip, right? Tend to get a large pullback after the hurricane hits. It's just the way it is. Traders anticipating, oh, stuff's gonna get destroyed in the hurricanes, and people are gonna buy a bunch of stuff. It's gonna be great for Home Depot. Gonna be, they're gonna need generators. Gonna be great for Generac. Blah blah blah. And then hurricane hits, and the excitement's over, and we book our profits and move on, and that causes a pullback. So likely tomorrow, after the hurricane hits tonight, gonna drop. It's not guaranteed, but just likely. And same over here. Hit the target, likely to see the pullback. Royal Caribbean, that's sitting, grinding targets. Looking for the pullback there. Lows, same situation. Although that bigger target I had up there from the bigger move, we may get a little extra 287. We may actually tap that before we finish out on lows. Depends. Is this stronger than the pending pullback? So I'm not trying to, I do feel for the people that are about to experience some devastation if this thing hits as bad as everything. I did see something last night. Like, we shouldn't call it something like Milton. We should call it something like Megatron Death Destroyer if we want people to actually evacuate. Give them horrible sounding names that people are, would be fearful of. And like, well, I don't want to die in Megatron, or it's a Transformers reference there. So that's up into resistance, and as I've said for a couple of days now, looks like we may go retest this support zone. We break through that. Down here would be the target. If we can get through up here, we have these highs up here to go retest, probably retrace, test the roadmap line again before we can go higher. And that would be the expectations. Like, this is key. If we hold that, lower is the target. GitLab. Just been a sideways chop, right? Like, we haven't really been making any kind of progress getting out of the lows here. Now, IPOs are typically bearish, and that could qualify as the low. As I talked about in the Term Trading Labs in-person event, we got to find the low on the chart. There it is. There's the low right there. Now, we only have a move up, a retrace, and a move up. That's 3 waves. What does that usually mean? That means it's corrective, and this could result in a lower low. May not be, like, this is corrective looking action, just nasty stuff. Choppy overlapping, and usually means we need another flush. That would be my expectation. When? You got me. There's a classic dumpster fire chart, if I've ever seen one. There's the reverse split. Didn't even know what it was in the first, but there it is. That's a dumpster fire. Don't trade it. Don't mess with it. The danger of losing money is extreme. Reverse splits are not bullish. 99.999% of the time. If you see a reverse split, it means the company is probably going towards zero. Reddit. That's in, this, so back to it again. This could be the low. That IPO made a lower low. That could be it. This is all corrective type, overlapping type action, not very conducive of going higher at this point, and we may see this extend down. It doesn't have, so this high, like, why do I say it's choppy overlapping? This high, this low, you see those? Now we have the next one, the high and the low. This high overlaps that low. That makes it not very, it's just not bullish. Like, it's just that we've got, you look at this high, first high, and this low. You don't want your highs and lows opposite. You know, once you've made a low, made a high, the next high, then make it the next low. You don't want them overlapping. Otherwise, that's overlapping action. All right. You skip a high and a low. If you have the high and the low in there, that's overlapping. So we need this to do something that's more conducive to going higher. And we also don't have enough candles yet to even get my roadmap line or anything like that. So that's all the ones that were up $2 or more. Stuff down $2 or more. FUTU, China stuff to continuing the decline, and probably coming back to the roadmap line. As I said yesterday, we may hold a higher low, a higher level of support, but the roadmap line would be the primary expectation here. That does have a mini little 1, 2, possible 3. We could hold a 4 in this area right here and go for a 5th wave higher. I just wouldn't bet on it. It looks like they went a little too far too fast. PDD still have, like, this is not like those other China stocks right here. This one bottomed out way back over here and went on the run, activated the entry. Target still 175 up there. And TES bounced right off of the downtrend highs and going back down, may make a full retrace here. That low, that high. We're at the measured bounce point, but if we get below it, may make a lower low at 71 area. DKL, Delic Logistics Partners, downtrends of highs. We're almost to the point of retesting that. Depends on how well you line up the highs. Looks like 45, 46 might be a resistance. If we get through it, we could go test the prior high at 53.60. Then we have that one up there at 58, but we're gonna have to do something here. Oh, that we did bounce down. Look at that. We bounced right down, right there. Duh. Not paying attention to the live price. We bounced off, bounced right down. There's your up. There's your support. There you go. Retested at 36. We don't hold that. Probably going down. And there's the support level right in there. Yeah. CNXT. That's VanEx Chinext ETF. Likely to come back down pretty deeply. Same. BABA. Likely to retrace pretty deeply. Hit some that hit that resistance from those prior highs. Retrace. How deep do we retrace? Good question. We could hold these highs over here, which is close to where we got to so far. This is showing more strength than some of the other stuff, but may do a retrace. Yen, I would expect that to retrace deeper. After a move like that, there's not many instances where we get a giant move like that and don't retrace it pretty deeply. Look, giant move, retrace. Even over here, giant move, retrace. Giant move, retrace. Giant move, retrace. That's just the way this operates. Even when we trend, when we do a giant move, we retrace it back to the roadmap line. Happens over and over and over. And this is so crazy high because of the reverse split right there. All these numbers are 20 times higher than they were before this reverse split over here. CHAU did the crazy pop and probably come back down. We're close to coming back down. This is leverage stuff. Be careful. Baidu, likely to come back to the roadmap line right there. Not much opportunity on China stuff right now for me. And Toyota Motors probably coming back down. We're holding that measured bounce. So right here, if we can hold that place where we tested there, testing again. If we hold it, go retest the roadmap line right there. Get through that, we can go higher. If we break down below here, probably coming down here. 120. Could find support in the 150s. Bounce up again before we head down here. So 150s would be the short-term expectation. There's the short-term expectation. And then if we break above that, we go higher. If we break below this, we go lower. So there's the... And short term is probably like the next couple months on this one. C-Web, maybe in weeks. C-Web probably come back down to the roadmap line right there. Played out. Probably coming back down. EDU. Played out into resistance. That may... Now, can we hold the roadmap line? If we hold the roadmap line, break back above this, the target is up here at 103. That potential is laying out there. So the roadmap line, very skinny right now, but it's right there, basically. Right in there. So if we hold that, break back above here, get above that high, we activate that trade right there. That high probability move from here to here. That's all the piece I'm looking for right there. But it's not activated until we get to close above that area right there. BA, still hunting the bottom. That next extension right there at 145, maybe down to 135. Still hunting that support. I drew the support back over here before we even came down here. We went a little deeper. Bottom of that support down at 140. Still grinding it, still hunting the bottom. Have not made a reversal yet for BA. ASHR, likely to come back down to the roadmap line. MSTR. Ooh, we got the target off of this last one. We touched it right there. Can we go for the bigger target? The bigger move back here? 213, possibly 226. It's interesting. We got the lower target. I have 10 shares of MSTR just sitting on them. I bought 1 share before the split and still sitting on that right there. MCHI. Not going to pretend like I'm trading giant amounts. Just had 1 share, which is now 10 shares. About $2 grand. Yeah, it looks like it wants to come back to the roadmap line. CQQQ, China QQQ. Basically, Investco China Technology may come back down. So there's the supports are the prior high right here. And the roadmap line, which is coming up. And we may come down and meet that all right over here. TCOM. Probably doing the retrace. Trip.com. If we can hold the high right here, we can go for the bigger target. That's 76. That bigger target comes from the bigger pullback over here. From this high, this low, projected up here. And I think it's on the log chart. Yeah, the log chart right there. All right. Bonus trade for the day. Churchill Downs. This one was on here a few weeks ago. We did fire off an entry. It's giving you a secondary entry here. The entry was fired off back here. We retraced to the roadmap line, held a higher low. This gives a secondary potential entry here. With the lower target, 143. Higher target being up here. Off the bigger bounce, 149. Still highly likely. This is like 94% of the time this goes on to hit the targets. Kind of done the double bounce there. And if you look at the entry, it was back here. So it's still rolling. Secondary entry potential right there on Churchill Downs. Now, Churchill Downs does not go fast, typically. That's the downside of this one. Let me pull up the statistics here and show it to you. Control V. Cool. I just messed that up. Browser. C. Control V. Over here. There we go. Churchill Downs. So, look at smoking win rate. 18 trades since 1993. 21 profit factor. Highly likely this is going up. Now, the other trade did fire off here and here. Now we have a secondary one here and here inside. They last a long time, though. 111 trading days. trading days. 111 on average. That's 18 in the average. Not quite a statistical population. About almost 2/3, a little over half, getting close to 2/3 of a statistical population. So when we zoom in and look at this, what are we talking about? 111 days, 111 trading days. So we're talking about 111 bars on average, and it could be twice that easily. So we're looking at 162 calendar days out to February. Might be how long it takes to get that move. That was the high, that was the low. Right there, 149 is the target. So it may take us out to here. It could take twice that long right there. Could be that long again. So it could be late summer next year before we get there. Kind of drift along. Maybe get the target there. Maybe drift along and get the target over here. Excuse me. All right. So that's the high probability potential trade right now. It's going to be a slow mover. This is not known for being a fast mover. You can see the statistics down here at the bottom. 94.4, 21 profit factor. That's still the same stuff right there. This is based on one trade, one share in the trade. And that was probably behind my head. All right. There you go. Now, bias for the day. Everyone wants to know, what's the bias for the day? I think we're on the path to break out. Like that stuff I drew yesterday for ES that I cleared off the chart already. I think we're heading up here. Like this is we're going to retest this resistance. We get through, we're coming up here. Right there. All right. Set you some alerts. We get through right here. This is the level. We get through, rocking and rolling. You know, just to rehash why I'm so hyped up on this. This right here, fired off back here. Right there. The profit factor on all this. And let me pull this up so we can see the statistics just a little better above my head. 94.1% of the time we have gone on to hit the target. Profit factor, even higher than the Churchill Downs one. And this is basically as good as the Churchill Downs setup, except it usually takes 38 bars. This is usually a fast mover. Now, that all said, where's 38 bars from the entry? The entry was right there. Right there it is. 38 bars. Looky right there. That's where we are. We're right there coming into it this Friday. Basically. Friday, Monday, somewhere right in there. Friday, Monday. I think I had the candle on the right one. So Friday, Monday, somewhere in there is 38 bars. Could it last twice as long? It could. But this could also get super excited all of a sudden and come up here and hit the target. The target for TQQQ is 92.31. You'll be like, holy moly, that's 20 points higher. Yeah, it is 20 points higher. Now, it could still take out here to get there. So be careful. Be careful, be careful. Nothing has to work. It could fail. It could be, could add to the loss column. Doesn't have to work out just because it's high probability. We've been sitting right at, we've just been grinding this right at the entry. Just grinding, watching theta burn the options. So I bought December options. Hopefully have enough time. So that twice as long, 38. Let's see. There we go. 38 times 2 be 76. So 76 bars puts us right here. That's December. That's why I bought December options. Twice as long. Puts us here. So it kind of sucked, but we could grind it all the way over to here, and it could be 3 times as long as I run out of time, and then and this takes way longer to grind it up here. I don't think we're going to do that, but it could. All right, that's the way statistics works. 50% of the time, it's below average. 50% of the time, it's above average. When you average together, you get the average. So be careful out there. I am going to go do other things. Hang out in Discord. So hopefully you have a great day. If you like anything I said today, give me a thumbs up on the video, and I'll see you later.